Oh shit, I got liquidated again. Well, that's what happens when you don't understand what leverage is. We will explain you how to control your leverage, how to control your stop losses, and how even to begin your cryptocurrency journey in today's episode. Because we have received a lot of comments and feedback where people want to know how to even start their cryptocurrency journey. All this in this power packed episode of Crypto Conversations. I'm your host, Syed Hussain. Welcome to Crypto Conversations, the channel that brings you the views, reviews, and news about cryptocurrency and blockchain arena, NFT, and Metaverse. While you're at it, smash the like button, hit the bell notification so you can get to know when new video comes out, and subscribe to the channel. Provide your feedback in the comment section, and if you would like me to cover a particular topic, I will be covering in the next episode based on your feedback. The disclaimer, guys, I only do this for an education and entertainment purposes. I'm not your financial advisor. So if you're seeking a financial advice, go seek a professional. Do your own research. It's your capital, so you need to be very careful about which cryptocurrencies or which assets are you willing to accept in, what is the amount of loss you're willing to take in. So always do your own research. Guys, what even is leverage? Well, leverage means that you can borrow money to take a much bigger asset exposure, which is multiple times of your equity. Let's dive into what is an actual definition of leverage. So leverage results from borrowed capital as a funding source when investing to expand the firm's asset base and generate returns on the risk capital. Leverage is simply an investment strategy of using borrowed money, specifically use of various financial instruments or borrowed capital to increase the potential return of an investment. What this simply means that assume I have $100 of capital, but I would like to take a position of about $1,000 and invest into my favorite equity like Tesla or a cryptocurrency like Ethereum. Well, if I use 10x leverage, it means that I can take on $100 of capital about $1,000 worth of a position. This essentially means that the $900 I have borrowed from the exchange on which I am trading, be it Binance, Bitget, Gate.io, or any exchange that is offering a leverage product. So it allows me to take $100,000 worth of notional exposure on Ethereum using only $100. Why is it important when you evaluate your position from the perspective of gain or loss? Let's dive into the simple calculations on a spreadsheet on how this leverage can enhance your returns or cause you massive amount of losses. So guys, I've just made a simple spreadsheet that explains you how you can use leverage and understand the change in the market can result in an amount of gain or loss on your leverage position. A lot of people do not understand that, and hence they get liquidated, because sometimes if the market goes in the favor of the position they have taken, they magnify their gains and it gets them excited, and the moment the market turns the other way around, they get wrecked. So let's dive into this Excel spreadsheet. So what I've done is that I have kept the mode as an isolated margin. This technically means that depending upon your position will get liquidated if your loss on your exposure becomes greater than the margin that you have posted. In case this is a cross margin module on Binance or Bitget or KuCoin or any other cryptocurrency exchange, the actual loss can eat away into your capital, not just the margin posted in your position. So be sure on what mode you have selected as isolated margin or cross margin when you're doing the trade. So what this Excel spreadsheet is simply saying is that in my trade one, I have taken a position of Ethereum. My entry price was 1218. I had 1 units of Ethereum. My direction was long, so my trade notional was simply my number of units into my entry price. I had used 10x leverage, which simply means that I would use only $121.8 worth of margin. Now assume that the price goes down by 6%. This essentially means I am now sitting on a $73 loss, while it's about a 60% loss on my equity, because total equity posted was only, or total margin posted was only $121. Now, what is important to understand is that if this was isolated margin and the price dropped from 1218 to 1096, that's a 10% change in the price. And in these markets, it's very, very acceptable. And this is something that is happening very common. This would result in a $121.8 loss and will liquidate your position. Most people do not understand this when they're taking a certain notional position. This simply means that on a 10x leverage, a mere 10% move in the price of the cryptocurrency that you're trading will completely wipe out your equity and liquidate you. Now, on the other hand, if the price started to go up and you were doing a long position at 1218 and the price went up and you had 5x leverage, so your posted margin was double the initial one, so it's $243. After 1 hour, the price went to 1,339.8, which is about a 10% increase in the price. Now the gain on the position is $121.8, and it's about a 50% return on equity. This simply means that a 10% upside in the position where you have in the direction of your position would result in a 50% gain. But it also means that a 10% price change, which is adverse to your position, means a 50% loss if your leverage was 5x. Hence, it is extremely important to understand what leverage can do, what is your notional size in comparison to equity or the margin you have posted, because a very small move in the price will get amplified and magnified if you're using a higher leverage, and will eradicate the position and liquidate the position that you're currently holding. Now, on the short side, because generally these days the market trend is downward and a lot of people are interested in taking shorts, including myself. But as I said, that I make sure that my notional position is something that I understand. I make sure that I have the capacity in my capital to take an adverse movement if there is a relief rally. So now, if your entry price for a short Ethereum trade was 1218 at a 10x leverage, while the price change was 6% up. So the price went to 1291. This technically means that you are now sitting on a $73 loss, which is about 60% of your margin posted. Now, to get yourself liquidated, if the price moves to 1339, which is a 10% change, and your leverage was 10x, you would be liquidated as your gain loss position. Your loss position would be $121. Now, on the other hand, if the price moves in your favor, which means that you are short Ethereum at 1218 and the price starts to move down, which is what we expected. Now, if the price goes to 10% downward, which is 1096, you would technically make $121.8 or 50% based on your 5x leverage, because you had posted a $243.6 of margin and you gain $121.8. So that is a 50% return on your equity on simply a 10% move in the direction of your trade. This explains why leverage is extremely important and why you need to be careful when you are taking an actual trade. A lot of people do not understand this. They go as much as 125x leverage, 100x leverage, 50x leverage. Now, if the price of that asset moves in your direction, well, your lady luck is on your side, but it's purely gambling and not trading. You need to be aware of the difference between a simple gambling trade versus a calculated trade, where you know where your stop losses are, where you know where your take profit orders are, where you know where your risk reward ratio is. So if you're looking for a 50% return, you should know what is the amount of loss I'm willing to trade while chasing this 50% return on equity. That means if I'm looking for a 10% price change from my position of entry, my stop loss should ideally be set at 1 or 2% from my current position. So that gives you about a 5:1 risk reward ratio. So guys, a lot of people in the comments have asked me how to even begin the cryptocurrency journey. So in this episode, what I'm going to cover is how to set up your Binance account and start trading using multiple options, a spot trade, a futures trade, or buying through your credit and debit card. So let's get on with a simple tutorial on how to use Binance. And I chose Binance because I frequently trade on Binance. I have accounts on other cryptocurrency exchanges as well. For example, KuCoin, Gate.io, BitGet. In the next episodes, I would be covering the pros and cons of using multiple exchanges, and for different types of trades, what are my preferred exchanges that I use. Okay, so let's dive into how to create an account on Binance. I'm going to be using my channel email ID because I already have an account, so I'm going to be using my channel email ID to set up a new account on Binance. Okay. Copy my email address and set up the new account. That's fine. Let's create an entity account, personal account as well. So I'm just setting up my account based on my channel's email address, set up a password. I don't have a referral ID, but if you have any referral ID of influencer that you use, you can use that. Let's click yes, next. So it will just send me a verification code on my email. So this verification code in here. In this step, I'm going to put my email address here. So in this step, I'm just going to put my phone number here. You can put your phone number because it is going to send a code to your phone number as well. So the code is going to come to your phone number. You need to punch in your code. So you can fill these details. I'm going to fill it off the screen because these are my personal details, but this is the basic verification that you need to do. So guys, after you have inputted your number and opened an account, the next step is that you need to verify your identity. In the next screen, depending upon where you're located, you can use, for example, I'm located in UAE, so I can use my Emirates ID or a driver's license. If I want to give my nationality document, then I can use my CNIC, smart CNIC, or the passport document. So once you have done your identity verification, it will basically register your account with the required KYC, and then you can trade. So I will assume that you go past this process and then you come on to the Binance main screen. Okay, guys. So once you have gone past the KYC update, it will bring you back to the main screen of Binance, which would look something like this. Okay. So this is a main screen of Binance. These are basically the wallets. Just an overview of what you have in your wallets right now. So I have funding across different wallets, but for now, I'm just going to be using my fiat and spot wallet. As we go along this tutorial, in the next few episodes, we will talk about the other wallets as well. So right now, my wallet only has $9. So once you see the screen, probably if you have logged in for the first time, this will be showing $0 balance for you. So the simplest way to make your first purchase is to go to the screen called Buy Crypto. And it's giving you three options. You can buy your crypto using a credit card or a debit card, a P2P, a peer-to-peer transfer, which basically means that there are other people on the Binance network, which you can transfer funds in a fiat currency to their bank account, or a cash transfer, and they will transfer you stable coins such as BUSD and USDT. And third-party payments as well. This is generally one of the most expensive options. So let's start with buying your cryptocurrency using a debit or a credit card screen. And I want to buy USDT. Let's say I want to buy 50 USDT. And it will basically cost me at a rate of 3.73 dirham. Obviously, this is going to be a little off market rate from what it is trading. The pegged rate is 3.673, but when you're buying from Binance, they will charge you 3.73 or 186.28 dirhams. If I continue, I can change the card. It's a card that's connected to my account right now. And always add a new card. Now, one important thing I would like to highlight at that point is that earlier, the cards in UAE were allowing you to buy cryptocurrencies without any charges, but lately they have put immense amount of charges, more than 3% or 4% on your transaction. And the second important thing is, until you settle this amount in full, they will consider this transaction as a loan or an overdraft on your card. So you will be charged a daily interest rate on your transaction. So I would highly recommend you never to use a credit card to perform your cryptocurrency transaction on any exchange. Rather, you should use P2P transfer, or you would like to use your debit card from your bank account. So once you put in your card details, let's say I can use my current card only. And I continue next, and it will basically populate my USDT in my wallet. Now, assume this transaction goes through, I would see my USDT transferred into my fiat and spot wallet. So once I've done that transaction using the debit card, buying 50 USDT, that was my first purchase on my Binance exchange. It would appear in your wallet over here as USDT, $49.99. Now I can use this amount to start doing my trading. I will go to my trade and do a trial trade on my spot account. So this is what the screen looks like in Binance spot trading. So now that I have already bought USDT and loaded up into my wallet, I can use that USDT to basically do my first transaction in a spot screen. So I will go to the screen in my Binance. So the screen basically gives me an option to place a limit order buy or a market order. The difference between a limit order and a market order is that on a limit order, once the price hits my choice of price at which I have set the limit, then my order will get executed. The market order is that based on the amount of notional that I want to buy, the trade will be executed at the best available market price. I would always strongly recommend to always place limit orders when you are buying and selling, because it helps you to reduce the inefficiencies and losses. Let's say I would like to buy $10 worth of Rune. The current market price is trading at $2.15 on the sell side and $2.194 on the buy side. So let's say I would like to buy it at 2.194. I would want to buy 10 USDT worth of Rune, which will give me about 4.5 runes. And I place my first order at 2.1, where the price has moved a little bit down. So I can place it, let's say, at 2.192. So I have to place a little higher order. Let's say I put it at $11 because it's not allowing me net of commission. If my order size is less than $10, it will not allow me to execute the trade. So I've put an $11 worth of order at the price has changed further. So I will, because the price is going down. So let's say I will put it at 189, $11. The market is going down. Calculate is at 2.185. So my order has been placed at 2.185 price. The current market is 2.188 or 2.187. Let's say a minute trade. The market is going down. If the price hits 2.185, my order will get executed. Let's see if my order gets executed. And I would not carry that trade. This is just for academic purposes. So I've placed a very small order at 2. So guys, my order has still not been executed. So I'm gonna change my order price or place another order. Let's say I place another order at 2.189, hoping that this will get executed. So I just want to teach you how to place a limit order and then consequently sell that. I've submitted an order. I will cancel the old order, which was placed at 2.185. So the price is holding at 2.191 or 190. So my order got filled. So if you see this, Rune USDT buy order at 2.189, price 2.189, 5 units of Rune got executed. Total 10.945, and then I would have been charged a commission on this trade. If I go to my trade history, this is the fee that they have charged. The total is 10.954. Now, if I want to, and if you would like to see where this is placed now, if you go back to your spot account, this Rune should show in your wallet. So see, I've got 5 units of Rune at 10.94. Now I can go back, I can click this trade and it will take me back to the trade screen. Rune USDT. Okay. The price has gone up. I would like to place a limit order at 2.3. The maximum amount of Rune that I have, 5 runes, and I will make 10.9650. I place a sell order now. at 2.193. So I bought it at 2.1. I think I bought it at 2.189, and I've placed an order of 2.193. Now, I don't recommend you to do that because obviously I'm being charged a commission on both sides of the trade, so it doesn't make sense. And an average commission is about 0.04 to 0.06% on the trade. So in this case, this is just for academic purposes that I'm explaining you how to place your limit orders on both the buy and the sell side. But basically, you should always have a target price in your mind after which you would like to sell this. So my order is placed as 2.193. The market is going down, so I'm going to just hold on to this position. So this was a simple spot trading setup, how to execute your orders. Now, if you had picked up a market price, it would basically close this order at a market price. Let's try and do that. I will delete this order and I will select a market price because I want to sell these 5 rooms at the market price. So this order will get executed immediately. See, it got created and then it got filled as well. Now I'll go back to my order history. The average price that it executed the order is 2.188 because the market is trading at 2.188. So this is a simple execution of a buy order at limit and a sell order at limit using the spot trading screen in Binance. Now, if you want to trade in futures, you will have to go to this derivative screen and then move to USD futures. Well, I will be covering trading into USD futures in a future episode, so we're not going to cover that in today's episode. Today's episode was basically setting up your Binance account, executing your first trade by buying through your debit card, and then once you have moved the USDT into your account, how can you trade into any of your cryptocurrencies that you like using the spot trading screen, using limit or market orders. Okay. So as we go to the end of this episode, I would just like to recap. When I explain you why leverage is important, whenever, especially if you're trading in futures or margin trading, you should know about your notional size in comparison to your equity or margin posted. We covered basically how to set up, how to start your cryptocurrency trading journey using Binance account, how to move assets or buy your assets using using a credit card or a debit card. I prefer to use a debit card because you'll get a lot of charges on your credit card. We then bought 50 USDTs and then moved those 50 USDTs into our spot trading account and did our first trade on Thorchain or Rune using limit orders and market orders. The difference between the limit orders and market orders was that limit orders get executed at a decided price that you have targeted, both on the buy and the sell side. Market order will get executed at the best available price. So as we end this episode, I would just like to highlight that market is moving sideways. We can have a dump or a quick release rally. So you need to be careful on both sides of the trades, going long or short. Keep your notional size and trade size small relative to your equity. Be careful. The general downtrend is still out there. The fundamentals and the economic indicators are not really good. So although the market had some green days, you need to be extremely careful on how you're trading in this market. So guys, futures trading is extremely risky. If you don't want yourself to be liquidated again and again, follow these 5 simple rules. Number 1, don't get emotionally attached to your trade. Most traders have their favorite coins and their favorite trades, and they try to catch a falling knife. So it is extremely important that you remain objective in your trade. You know where your stop loss are, you know where your take profits are. The second most important thing is always understand what your trade notional size is compared to the margin or equity you're carrying in your futures account. This simply means that at 10x leverage, means an adverse 10% movement in the market price will simply liquidate you. Always understand what you're willing to lose and place your stop loss limits there and sell immediately. Don't FOMO in, don't chase a red or a green candle, considering that this trend will continue to fall. It's an extremely volatile market and the reversals are very painful and very sharp. Always keep the risk and reward ratio concept in your head when you're entering into a trade. As long as you follow these 5 tips, I'm hoping that you will be able to traverse this extremely volatile market environment. Thank you. So guys, in this episode, we covered the concept and importance of leverage. We covered how to set up your Binance account from scratch. Hope you would be able to use this tutorial to set up your Binance account and start your cryptocurrency journey. But in the end, I would again say right now, it's highly volatile market these days, so you should be very, very careful while investing in cryptocurrencies. I would personally suggest for you to wait because the bottom is not in right now. You might be able to invest in your favorite cryptocurrencies at a much better entry point. Right now, spend more and more time to learn the concepts, watch a lot of YouTube videos, follow my own channel, subscribe to my channel, hit the like button and the notification bell as I continue to bring you more episodes around the news, views, as well as the required tutorials. Be careful with your capital, invest wisely as the market moves sideways and there is no clear direction on a reversal trend or a further downward trend. Take care. I'm your host, Syed Haider Hussain. This is Crypto Coinversations.